Welcome, ladies and gentlemen, to the Pip Dealer Presents the Forex Hip Hop Lesson 4080. We're going to start off with a real simple, basic lesson for a lot of newbies and some people that are intermediate and advanced. It's called support and resistance. Now, you'll notice on my screen that I have a chart up, and the platform is called TradingView. But TradingView.com they have free accounts, but I have the Big Daddy account that allows you to do more, it gives you more bells and whistles. So you're probably wondering what support and resistance is. Probably wondering who I am. Well, let me introduce myself. My name is DJ J Mob, but I'm also known as the Pip Dealer. I've been trading for 5 years, Forex markets, indices, metals, gold, commodities, oil, cotton, that type of thing. So again, in today's lesson, we're going to go over support and resistance. And we're going to have many lessons that I'm going to be sharing how I trade on the markets, one of my favorite pairs to trade, and those type of things. Also, there's a place called babypips.com. That's B-A-B-Y, babypips.com. That's the very first place you should go to learn how to trade. And let me bring that up here so I can show you. Because a lot of people are asking me, can you show me how to trade? Well, I've been trading for 5 years now, and my people know that you got to have some skin in the game to trade. People want to give me money to trade. It don't work that way. You have to learn how to trade. Now, I'll do some management of some accounts, but again, when you playing with people's money, people get real finicky about that. So, babypips.com is where you want to go if you want to start learning to trade, and that's what I did. Now, if you notice on this screen here, if I go down a little bit here, it's free, right? It's free. And they have multiple lessons. So you have all these lessons you can sign up for, all the featured lessons. How do Forex brokers work? What is Forex? Chart patterns. I took all these courses. They're free, right? I decided I wanted to learn how to trade. You know, what are candlestick patterns? All these wonderful things. Technical analysis, which I'll go over in another course. Fundamental analysis, that type of thing. Let's see. Forex world is huge. As you see, there's multiple courses that you can take. I think there's like 300 overall. But you sign up, create your free account, and then you just start learning. You have to learn the basics of Forex first. That's the first thing. People want to jump in the water. You don't want to just go to Las Vegas and start betting and losing money like that, because you're just gambling. They say Forex is gambling. It is gambling if you don't know how to trade. There's a lot of things that go on in trading. One is risk management. Some people, I think, have to be real with trading. You know what I'm saying? You have to be, mindset has to be correct. You have to have heart. You have to know when to get out of a trade. So let's say you lose $500 today. Do you give up trading? Or do you continue trading? I've lost a lot of money in trading. I'll tell you a story right now. I was so hot-headed that when I first started trading, I started trading with this, what I call US 30. US 30 is what they call very volatile. It moves, it's like Wall Street, whatever. So here's the story. I had $1,000 on my account. I traded, I think with a .01 lot size, and I'll go over some of that down the road. Just give you like an idea what I did here. So US 30, you can't turn your head, because you could be up $500 and down $10,000, just like that. So I was up, I had $1,000 on the account, I put money in the broker, and I was up $3,000. I thought everything was all gravy, right? That point, you got to manage your trade. You got to manage your trade. You either got to get out, or what they call, you got to move your stop loss up, trail stop. I'll go over that down the road. But you're trying to save your trade. So if I had $3,000, I should at least take $2,000 off the table. Or I put $1,000 into the account, and I got $3,000. I made 3 times as much. I should at least take $2,000 off and let the other $1,000 run. I didn't do that. I just let it run. And I came back 2 hours later, I was down $5,000. So that makes no sense to me. At that time, I was like, wow, this US 30 got me. So then that blew that account. I blew the account, which means I was zeroed out. So went back to another account, put another $1,000 in there. I said, okay, this one I'm gonna be a little bit more easier. I'm gonna, watch what I'm doing. I was up $4,000 on that account, and I did the same old crap. I went back 2 hours later, I was down $7,000. So a point of the matter is that when you're dealing with these Forex pairs, specifically volatile pairs, some pairs move slower, they're like rabbits, but this one moves ultra fast because it's a high level volatile pair, meaning that it moves. It's a lot of movement, specifically when you have volatility when the market's open. Like New York market opened up at 9:30, or the London market opens up at 3 a.m. You'll see candles moving up and down. They're moving quick. So I'm gonna show you something real quick here. You'll see this here, and you'll see that there's no volatility, which means you don't see no movement. You see how slow this is? See the candles here? They're not moving very quickly. You see, they're moving slow. You can see the little timer over here on the right. They're moving very slow. So what that means is that we're in the Asian session, and the Asian session is a very slow session. So you're thinking of Tokyo. Like over in Tokyo right now, it's probably I think 11 hours ahead. I'm not sure, but the market opens up. The U.S. market opens up at 5 p.m. Right? So the Asian session will run from 5 p.m. to 2 a.m. So in that time, typically the markets are moving very slow because it's not a lot of volume. What I mean by volume is the banks are not pushing a lot of money into the market at that time. So it's slow. It's like driving on a road and you're doing 30 miles an hour. But when London rolls around 3 a.m. in the morning, which is 8 o'clock their time because we're 5 hours behind them, then the market will start to move much quicker because the banks are pushing more money into the market. They're flooding the market with trillions and trillions of dollars. So at that point in time, you're going to see pairs like US 30 and other high volatile pairs start moving. And that's kind of the time I like to trade. You can find some good trades in Asian session, but the volatility is in London and New York. So within New York session, it's 9:30 a.m. So when 9:30 a.m. opens up, that's when the markets open up. New York markets open up. And then that's when the volume starts pushing in. So you'll see, if you're on the charts around 9:15, you won't see that much movement until about 9:30, unless there's news. And let me go over that real quick. So there's so many things to go over when trading. And we're kind of here and there all over the place. There's a place called Forex Factory. Forex Factory, Forex Factory, is a news site that shows like what news is running in the market. So what I always tell people is that let's see. Here we go. This is it. Here we go right here. Okay, so this is Forex Factory calendar. So every morning when I wake up for trading, I get coffee, whatever else, I check the news. Because the news, you look for red folders, like here, it's 10 a.m. USD news here. These red folders move the market. The yellow folders are neutral, but the red folders are moving the market. And there's certain red news events that will move the market. It could be federal, it could be tax, it could be something going on with the war, presidential election. There's the federal, what is his name? The federal chair, Powell, speaks. He talked about inflation, all those type of things that will make the market move. Like news. Remember when the pandemic came out? There were certain factors that that went into the market, that type of thing. Goods and services. But we're on this week here. Today's the 6th. So on the 5th, you can see right here at 10 a.m. there was what they call ISM news. So a lot of these news events will trigger the market. Sometimes they will make the market move quicker. Sometimes they won't. It depends. And then you see this is Monday. Then Australian news came out 10:30, and they had a cash rate, RBA. So these things here are news-related events that are happening in Australia. They're dealing with inflation and whatnot. Sometimes I trade these news events at night. Today's Tuesday. So if I scroll down here, you see that we had some news at 12:45. The Canadian news. And it was, I think it's Bank of Canada. And he's the Governor Macklem spoke. So there was some Canadian news. So if you're trading like USD CAD, or you're trading a CAD pair, like GBP CAD. So think of this as I'm in the United States and I got to travel to Canada, right? Or I got to travel to London, right? And London has the pound. That's the currency. So if I have $1, I got to travel over to London and I got to make an exchange. So it's exchange rate. So how many pounds can I get for $1? That's the conversion rate. So when you trade Forex, you're trading currencies. You're trading world currencies. If I travel to Japan, I have the Japanese yen, right? So you can trade, there's a commodity, there's a Forex pair called USD JPY. It's the United States dollar versus the Japanese yen. So if I fly over to Japan, I have to take my dollar, right, my dollar that I have, right, and I got to convert over to yen so I can, pay whatever bills I have over there. Most times in Japan, they probably take the dollar, but they probably would like it in the yen, because that's their own currency. So that's kind of like the Forex is. So if I'm looking at NZD here, at 4:45 today, we had NZD news. So that's the New Zealand dollar. So that's what I call the New Zealand dollar versus the US dollar. So in that matter, if I go over to New Zealand, I have to take $1 or whatever that might be and convert it over to their currency in order to pay for goods and services over there. So that news is at 4:45. So there probably was some movement on the New Zealand dollar or New Zealand dollar. They have the New Zealand JPY, that's NZD JPY. That's the New Zealand dollar versus the Japanese dollar, or the yen, excuse me. So there probably was some volatility at that time, but not much volatility because the markets will close at 5 and they reopen. So you only have 15 minutes, so you gotta be careful with that. So tomorrow is Wednesday, and I don't see any red folders here. The folders that I do see is one of the FOMC persons speaking about 11 o'clock. It's a brown folder. Yeah, yellow's brown. So they call medium impact. So there might be some news that might move the market here and there. There's another thing here. If you're trading oil, it's called crude oil inventories. And I think every Wednesday they come out with a report, and the report will tell you like what they think oil will do. How it will move or not. Because the oil right now is down. Let me go to oil. I can see oil here. Oil is down. You see, oil now is selling at $73 a barrel. So that's low because if you figure oil, all the Saudi Arabians over in Dubai and overseas, they want oil to be up, $140 a barrel because they make money on that. So right now oil is down. So the people over in Saudi Arabia are hurting. So they're expecting oil to make an increase. But that's another story. So go back to the calendar here. Let's see. Tomorrow's Wednesday, right? And there's no USD folders. There's a USD folder on Thursday here, 8:30 tomorrow on Thursday. So I'll definitely be trading this. It's unemployment claims, and then again, the unemployment claims could be dealing with the unemployment that's going on in the United States. So every time they have an unemployment claim news, they put a report out. They'll say, well, the unemployment rate is such and such. We've hired so many people, or the unemployment rate might be bad, depending on what the economy of the United States is going through, specifically the dollar. So that affects the way you trade. So you have to be cognizant of the news, because if you don't know what's going on in the news and you enter a trade and the news is taking the trade the other way, let's say I'm trying to take a buy on gold and the news takes the sell and tanks the other way, it goes down. So that buy that you had, you'll lose money on it because you didn't know that the news was taking gold down if you didn't have the information. So a lot of times they tell you not to trade the news. They say let the news do its thing, and then when the news is settled, then you figure out the direction of the market using your indicators, using your technical analysis, using your fundamental analysis, and then you look for an entry in your trade, which again we'll show you down the road. I just wanted to show you that the Forex Factory calendar is very important in trading. So we've covered the Forex Factory. You need to know that. That's forexfactory.com. Then you got babypips.com. That's the that's the first place you need to go if you want to learn how to trade, because I can't even have a conversation with you about trading if you don't know the vocabulary. Doesn't matter how smart you are, you have to know the vocabulary. That's very important. It's like going to class. You got to know the vocabulary. So, and then we go back to the charts. So one thing I wanted to do was go over support and resistance. I went over a lot earlier here with this here, but now we're going to go back to We're gonna go back to the daily time frame here. All right, so back to the lessons in the hand. We're gonna go over support and resistance right here. Oh, thank you, sir. This is my main man over here, film master. Got too much going on my throat here. I gotta clear my throat for the dope rhyme in the road. So anyway, we're gonna go over here to support and resistance. Now, the one thing that I want you to see is that think of support and resistance as a ceiling and a floor. So we gotta know what the high is and what the low is on this here, right? So on US 30, I'm gonna go to the daily time frame, and what I'm gonna do is I'm gonna pick up a line chart. See, you can flip from candles to line chart. Here's a line chart. And the only thing I want to do is I want to find the high. Think of the ceiling. So I'm going to grab a horizontal line here and put a line right here. That's the high right there. You see that, the high? And I can label it. That's the high right now. So go in here and I put high. Right? Or better yet, we can put resistance. Because it's like the ceiling, right? It's the high, right? And then, that's the ceiling right there. And then I want to find the low. At least I want to go back a couple of years. You see that 2021? I can probably go on a weekly time frame. These are weekly candles. And then you have monthly candles. Those are just different time frames. But I can come down here and say, right in my window right here, this is 2017 right here. I'm 2015. This chart goes back to 2015, you see, right? So I can bring a horizontal line here and put this right down here. Yeah. So now you see, I'm gonna really erase these because you know that. So I have resistance here. That's like the ceiling. And this is, I can clone this. And this is the support, which is the floor. So imagine you walking. I can bring a guy here, right? We're gonna bring a guy here. Let's see, can I bring a guy? Where's the guy? Let's bring the guy. Let's see, can I bring a guy here? Looking for a guy. Let's see, I want to bring a guy. These are my different icons. Do I have a guy? Right here. We're looking for a black guy, but we'll take a good guy here. Let's see, do I have a guy like this? Yeah, well, let's just take this guy right here. He's good. So we're gonna put him right here, right? This guy right here is on this. He's on the floor, right? Because that's the lowest part right here. You don't see any candles below that, the line, right? That's support. And then we're gonna clone the same guy, right? Clone, and we're gonna make him up in the ceiling. So think of it as a football field. You have the out of bounds up here, and you have the out of bounds out here. This is the playing field here, right? But I like to get levels. So I like to draw a line and show where the lines, I can draw a line here, but I want to draw a line and show where the lines connect with my the points. So here's a line right here I can connect right here, right? If I scroll in here, you'll see that it hit here. Hit it here. I'm looking for multiple touches. That's a nice little area, right? Multiple touches, that's a good line there. Right? I can draw a line maybe right here. That's a low, right? Hit right here, hit right there. That's two spots right there. I need to have two spots to make a line. But more spots hitting is better. Like this one here is not bad. I would go here. See, there's only one here. But if you go here, you see that it hit right there, hit right here, of course, and these two, right? You don't want too many lines together because it gets bunched up. So I'm just trying to find levels. This one right there, that's a good one right there, right? Because I had two lines right there. So if I'm going over here, where else am I looking for? Well, come over here. Put one right here. That's not too bad because it hits right there. All right, how many lines I got? 1, 2, 3, 4, 5, 6, 7. That's pretty good. I can probably put one right here. That's not too bad. Remember, this is a weekly time frame. These are weekly candles moving. Think of it like you can think of it of a minute time frame, a candle moves in a minute, 5 minute, 15, 30 minute, 1 hour, 4 hour, 8 hour, daily. This is a weekly time frame. So the higher time frames is where you want to look to see, because you can see where you're moving, and you right there. All right, so that's line. So then I go to candles, and you see how the candles look. See, did you see that? I want a line chart and the candles. So now I just want to make sure that the lines are kind of where I want them to be at. You know, I move them up here so I can see what's going on. This one here is kind of hard because you can see it's kind of taking both places here, but that's fine. So now I'm on a daily time frame. So what I normally do is I mark up my charts, and then I'll lock it over here, because you don't want to, if I don't lock it, you know, you'll be able to move it, right? See, I can move the line here. All right, so I'll lock it up there. Actually, let's lock the lock here. So if I lock it, so I can move it, I don't want to move it, I want to be able to have it there, right? So I lock it here. Then what I do is, this is the weekly time frame. So then I'll go down to the lower time frame, but you can see clearly that this is an uptrend, right? There's three types of movements in the market. There's uptrend, meaning buy, sell, downtrend, and you got ranging, which is moving side to side. That means that the market's stuck in a block, which means there's no buyers or sellers. There's an equivalent number of buyers and sellers. So you don't want to trade in a ranging market. That's another lesson. So for this lesson here, you can clearly see that this is an uptrend here. If I take what they call a trend line shows the trend, right? So you can clearly see that this is an uptrend here. This trend started on April 20th. Excuse me, Monday, April 6th, 2020. You can see the date down here, right there. So what I do is basically draw my trend line, and you can see that if you were trading on a weekly time frame, this is where you would have entered this trade right here. You would have entered it buy here, right? And then you would have rolled it all the way up. This is 2020. So some people have bought that trade there because they're trading on a higher time frame. They're doing what they call swing trades. There's three types of trades you can do. You can do scalping, which is you get in and out of the market. So you're trading on a lower time frame. You're trading on a 1 minute and a 5 minute. So you're trading on a very low time frame. Then they have what they call intraday, which means that you take a trade at 9:30 and you hold it to the end of the day, 4:30, 5, something like that. Sometimes you can take it over the next day, next market open day. But a swing trade is meaning I'm holding it for weeks. So if I got in this trade, let me draw a vertical line right here. This trade on March 23rd, 2020, right? I'd hold this trade all the way till now. So that'll be what, almost 4 years, right? You see, but most people don't swing trade like that. They intraday and they scalp because they don't want to hold a trade that long, because you have to be very patient and you have to have a lot of skill set to do that. That's a different type of trader. So you see that this is my uptrend here, right? And so this market is bullish. So they have two different type of markets, two different type of markets. Again, one is bullish, which means you see a buy is going up. One is bearish, and bearish means it's going down. But you can see that this market has been going up for a long time, right? You can see that clearly, right? I'm getting rid of this line here. Actually, I can put a line in here too. Let's see, get rid of this here. All right, so let me delete this here. So this is a bullish market. We can see. You see it going down a little bit, like here it's going down. Right? That's what they call retracement, which means that there's a correction in the market. So again, that's another terminology that we have. We have pullbacks and we call retracements. So, and you can always get in on a pullback on a trade and take it the other way. So that's another thing you can do. Like I said, we're going over a lot of terminology here, but trading can be very lucrative if you understand how to trade. If you don't understand how to trade, then you can lose a lot of money. That's very important to know that. So here is, again, support level here, right? And this is where we are right now. This is where we are currently right now. So what I would do is basically I would hop down to a lower time frame, right? So I'm on a weekly time frame. There's the 3-day time frame where I can look to see how the market looks 3 days. Almost look the same because it's still bullish, right? So I'm going to just write that in here that US 30 is bullish, right? This is a bullish market we're in. So what does that mean? That you should only be looking for buys. If you are trying to trade against a trend, that can be very tricky. You have to have a certain skill set for that. So you see this is moving all the way up here, right? So let's continue. I'll drop down to the daily time frame, right? It still looks bullish, right? Still bullish, right? All right, I'm gonna drop down to the 4-hour time frame, and this is where I'm gonna start looking for entries because I want to trade this market. How do I trade this market? Well, you see that I got my levels, right? We call them zones. So if I look at this chart here, I'm looking to see where could I have gotten in for a trade if I was looking at this market here, right? Where could I got in for a trade? Well, I could have gotten in right here, right? That would have been a nice entry if you see that right there. I could have gotten an entry right here, right on this trend line right here. This is called a trend line bounce because what happened? Let me show you what happened here. Price came to this point right here. Let me open it up so you can see. Open it up. So you can see price came down here to this trend line right here. What happened? It bounced off it. It's like somebody shooting a gun and bouncing off your chest, whatever else, and bulletproof vest like that. But this here is where price bounced off here, and this would have been a nice entry. This was Thursday, October 26th at 10 a.m. So this was right in, 2 a.m. So this was right in the New York market, or what they call right after lunch. There's always a lunchtime move, and that's something else we're moving. Let's see. So that's been a nice move right here. And then you see that would have been what? That's 23 of last year. Actually, nope. That's October 27th, 2023, 2 o'clock. So you could have held this trade for how many months? From then all the way to now, right? That's a swing trade because you're holding it for multiple weeks, right? That's today, February, 6th. So you see, that's a whole thing you're trading now, right? So now we're at this level right here. This is the high right here. We're at the resistance here, right? So what happened at resistance here? What happened with price? Price came all the way up here, right? And it rejected. It's like when you're going for a shot and Kobe or Shaq blocks your shot when you go to the rim, you have a clear vision to the rim, and some guy comes over and knocks it out the way. So that's what happened right here. It hit this here and it rejected, right? Price rejected. So what does it mean here? That means the sellers came in the market a little bit, right? Green candles are buy candles and red candles are sell candles. So you do see some red candles here, but you see that, remember, we said that the overall time frame was bullish. So there's more buyers in the market. The buyers are pushing the market up. But sellers will come in every now and then and push the market down. So at this particular point, this asset is way overbought, which means that it's like super saturated. It's so many buyers in the market that this market has to crash at some point. Has to crash. So when we look at this here, we look at the 4-hour time frame, right? So when did it actually start to come down? Well, on day is this. So on Sunday, which is this week, right? It reached this high level right here, and then you see it kind of retrace, which means it started to sell off a little bit. So each candle is a 4-hour candle, right? So we can see that there's candle patterns that are all in the market. And that's a whole different thing, candle patterns. Candle patterns help you determine if prices are going to reverse or if it's going to continue going, continuation. And that's other things we have to, take into consideration when we're trading. There's so many different elements. There's levels to trading. There's candle patterns. There's different Forex indicators that I use. Indicators are tools that help me. No one can tell what the market's going to do, right? It's like a weather man. Do I know it's going to be raining tomorrow? Well, they say it's going to be raining next week, and it's sunny next week. We don't know that. We use forecasters. So these indicators, these tools I use, help me forecast, make an educated guess to where I think the market's going to go. But based on past tense of things, past history, everything that happens in the market before happens again. So if it goes up, it's got to come down. So That's one of the things I look for. So this area right here would have been an area that I would have looked to buy, to sell, because I've got resistance here. So if you look very carefully, I'm gonna open it up a little bit more. You'll see these candles, right? Look at these candle patterns. You see these candles. You see this big green candle right here, right? See that candle right there? That's what they call a bullish candle. That's like a bait candle. That means there was a lot of money that was flushed into the market that made this market rise up. And this is a 4-hour candle. This was at 10 o'clock. So you can see during the New York session, there's trillions of dollars that get shoved into the market, right? We're just trying to get a certain piece of the action. You know, like what is 0.25% of $1 trillion? You can get paid off that. You can make $10,000 a week in trading. You can make $100,000 a month in trading. You can lose $100,000 a month in trading too, but you have to know how to trade. That's another thing. So one of the things I learned from 5 years ago was searching for candle patterns, because when you look at candles, you'll see different things. So I'm going to take a look at this candle right here. So this candle right here, I'm looking at right here. I'm going to draw a line here. Let me draw an arrow here so you can see what I'm talking about. This candle right here, right? That is a banker's candle, which means that the banks you're thinking of Bank of New York, Citibank, Bank of London. You're thinking of all the top-notch players that are out there. You know, Citibank, Wells Fargo. What's some of the other financial places? I'm gonna think Fidelity. These companies have billions and billions of dollars that they'll flood the market, and these are what they call market makers, and they make the markets move up or down. You know, they're the market makers. They're the traders that are on Wall Street. They're traders that that are trading, Bank of London, whatever else. These are the people that have the ability to move the market. Everyone else is called retail traders. So we want to trade on the side of the banks. So if you saw this move right here at 10 o'clock, you'd be looking at trying to take this all the way up here, this move here. This is a 4-hour candle, right? So if I drop down to a lower time frame, a 1-hour time frame, right, you can see, let's go back to the 4-hour time frame. Let's mark that candle. Let's keep an eye on that candle. That is the, let me go back over here. That's the candle right there we want. Over here. So this is the February 2nd, right? So I'm going to drop down to a lower time frame, and I'm going to look for that same candle. February 2nd at 10 a.m. during New York. February 2nd. Let's go over to the 1-hour time frame. So I'm looking for that candle, which is way over here. That's that candle right here, see? So if I was to trade in New York, that's 9:30, I always get up 2 hours before I trade, and I always look left so I can see what the market has done. So I'm gonna bring my eyes here. These are my eyes right here, right? So what time am I getting up? I want to get up at 8 or 7 is better. I'm up at 8, right? So my eyes right there. So now I'm looking. I have to look left to see what the market did, because I got to prepare myself for New York. So what do I need to be cognizant of? Well, what happened here, right? London opens up at 3 a.m. So I'm going to put a line at 3 a.m. Where's 3 a.m. over here? That's 19 to 7 o'clock, 8, that's 10. 3 a.m. The London market opens up at 3 a.m. is right there. So the market opens up right there, right? So what happened here? Well, you see a bunch of candles that's just stuck together. See that? I call that ranging. That's side to side. It's like sardines. Just when the market moves sideways, that means there's no movement. That means it's called consolidation. And we don't want to trade in consolidation, because you'll be in and out of the trades. So I'm gonna draw a low line here like this. See that? That's a little block here. I'm gonna take off the extension. See, extend right, extend left. And I'm just gonna draw it here. That's called consolidation. See that? So if I draw it all the way across like that, it's called consolidation. So what time did the market start consolidating? Consolidating means that there's equal number of buyers and sellers in the market. They're not doing this. It's dead. There's no volume. Nobody's pumping money into the market. So it started around 6 o'clock. That's the Asian session I was telling you. This is a perfect example for the Asian session. Asian session starts at 6 o'clock. So on Thursday, February 1st, 6 o'clock, 6, 7, 8, see, up and down, up and down, up and down. It's like a bouncing ball. It's up and down, like this. It's tight. It's tight spot. It's up and down. So you don't want to trade those markets. So what happened is that I look here, I say, you know what? This is a consolidated market. Consolidation, we call it ranging, consolidating, right? Consolidation. I don't call it ranging market, it's ranging market. It's side to side. Side to side. Right? But side to side could be a good thing because the market means it's going to break out. So if I draw this here like this, what happened? It's breaking in and out, in and out. You see it broke out here and it tanked. This is a red candle here, tanked. At what time did it tank? It tanked. Might mean it tanked. It sold off. It sold off at 7 o'clock. Is that 7 o'clock? I think I'm tripping. Right? 8 o'clock, excuse me, 8 o'clock. So the New York market opens up at 9:30. The London market ends at 7, 8 o'clock. So you get a crossover of markets. So you get the London starts at 3 o'clock, right? And it goes to 12 p.m. But the New York market and the London market will cross over. So you're looking at London money mixing with New York money. That is the most volatile part of the day between New York and London because you're gonna get the London banks and New York banks putting all this money in there. That's why you find a lot of trades between 7 and 8 o'clock. So here is 8 o'clock, and you see this market tank. All right. So, but I don't trade London. I mean, I do, but if I'm trading New York for this session right here, I'm going to see where the low of this candle was. So I come over here, and you see that this has a little bitty wick on it. I don't know if you can see it or not. Let me blow it up and see. See this little wick? So the sell opened up here, and it sold off all the way down here. So I'll take my low line, right, and draw a low here. But what happened also? I got this green candle here. It's like a spinning top, right? You see it squeezed. So you see sellers that came in. This is called a doji candle. Doji candle is indecisive. It's indecision. The buyers didn't know what to do, and the sellers didn't know what to do. So you got this candle pattern right here. This is a doji candle, right? It's like a spinning top. So now what I do is bring my candle down here, bring this down here, and now I have a low down here. So this is at 8 o'clock, 9 o'clock, right? This is the 1 hour time frame. So now I'm looking at this area here and say, you know what? This is indecision right here, right? So I'm expecting, price to reverse. I believe that's the right one. Let's see, there we go. All right, so this is a doji candle right here. So now I can jump down to the 30-minute time frame, right? And look for my doji candle. Where's my doji candle at? Right here, right? So you can see that it's sold off right here. So when 9:30 rolls around, I'm gonna be ready to buy the market going up because the price didn't break this low level here. This level here, right, was one of the levels I had earlier. Remember when I went down to the line chart, remember, it was one of them levels that we had. It was a significant level. So now I'm on a 30-minute time frame with candles, and I see right in here would have been the buy opportunity for me. So what I would have put here, right? Buy opportunity. Buy now, right? I would have bought the market right here, right? Because price never came back down to this level and closed below here, right? So it came down here, and what happened? It rejected, right? This candle here rejected. This is the 9:30 candle right here. So the market opened up at 9:30, and it was indecision because remember that 1 hour candle, 8 to 9 candle was the doji candle. Remember? That's indecision. So at this point you got to wait. You sit on your hands and wait. Then at that point, I dropped down to a lower time frame because remember, I told you that the higher time frame said the price was bullish. It's called HTF, higher time frame. Higher time frames govern everything. So look at the daily, look at the weekly, daily, the 4-hour time frame, the 3-day, and all bullish. So I said, I'm only taking buys in this market. So what I do is I wait for 9:30 to roll around, and then boom, I jump in this trade right here. I jump in right here, right? Once this candle closes, once I see this candle close, this candle right here closed, and it rejected, and this candle here opened up, the green candles open on the bottom, I would have jumped down to a lower time frame, 15-minute time frame, because I'm trying to find what they call a sniper entry. I'm trying to find the best possible entry I can get. So I'm jumping down to a lower time frame. You see right here, I would have got in right around here someplace. I probably would have got in right here, right there. That would have been my entry right there to this trade at 9:30. Actually, it's at 10 o'clock, excuse me. At 10 o'clock, I would have entered the trade, and I would have held this trade all the way up to up here. That's 3 o'clock the next day. I mean, in the afternoon, excuse me. So I typically don't trade that long. I only need a couple hours to trade. So that's 10, this is 10 o'clock to 3. That's 5 hours I would have held the trade. Now you see that you got some pullback here, right? You got some red candles. But if you look at the trend, if I draw a trend line here, you see the trend is up. Right? This trend's up. Clearly see that. Up. So this would have been a great buy opportunity if you were, but remember you had to look at news too. On February 2nd at 10 a.m., was there any news that pushes markets up? Let's go to the calendar Forex Factory. February 2nd. That's what? Friday? Right? So I go to my news outlet and I look for news at 10 o'clock. Was there any news at 10 o'clock? There was news at 10 o'clock, right? There was something called NFP. That's non-farm payroll. That is a major news event in Forex. So you see 8:30, there was a lot of movement. Let's go back to the chart, 8:30. What happened at 8:30? Well, 8:30 was right here. Look, 8:30, what happened? 8:30, you see the market, it tanked. You see this? You see it tanked right here? It started to tank right here at 8:15. That's when the NFP is 8:30. You see it tanked, right? So we always say, wait for the news to trade out. So what happened here? The news came down here and made these lows. I wait. I get my candle patterns tighten up. I go back to news and say, what do we have now? We had 10 o'clock news, right? It was revised U of M consumer sentiment news. Dealing with, I want to say consumer business news, that type of thing. Still learning about the news events. It's all a new learning pattern. But this news here at 10 o'clock moved the market back up. It pushed the market up. It pushed the volume back up. So at this point, I'm in the trade here, right? And the news is helping me push the market up. So that's what's called volatility, because the news is pushing the market up. That helps me keep myself in that trade because I want volatility on Friday. Some people don't say trade on Fridays, but if you understand the way the market moves in news, then you could have got this trade. Buy now, and you don't want to be greedy, right? So it depends on how you trade. Everyone has a trading plan, but I trade New York sessions from 9:30 to 3:30 or 4. Sometimes I hold trades longer, sometimes I don't, depending if the market's, what they give me. But this was a clear sure shot. It's February, and now the market makers are back from vacation, and markets should be flowing normally now. So if we were doing a live trade, and we're going to do those, I'm going to do a live trade right on this channel right here. Show you the sauce. I'm not going to give you all the sauce, but I'm going to give you some of the sauce so you can, do what you need to do. But a lot of it's support and resistance. That's the basics of Forex. Trend lines, breakouts. We want to do support and resistance, supply and demand, candle patterns. And again, all that comes from babypips.com. I can't say that more than anything. See this here? Potential pullback, see? Then you have different things. Revenge trading, that's something else. That means I've lost 5 trades in a row, and now I want to go back to the market and try to win. That's revenge trading. That's the same thing as gambling. I'm gambling on the roulette table. I've lost $10,000. I got to go back to the hotel, get more money, and go back out to Las Vegas and spend more money. That's revenge trading, revenge gambling. You don't want to do that. That's part of risk management. That's part of your mental state. This Forex game is deep. You don't have mental stability, you don't have the heart, this game will eat you up. It truly will. That's why you have to know how to trade. Breakouts. So look at here, it says chart art. Is this pair ready for a breakout? Right? And I had this here as a breakout, right? So you see it broke out. Like it's almost like breaking out of prison. You break out. So it's trapped here, right? And even if you didn't feel comfortable trading here, you could have waited for a breakout, which is it broke out, came back in the zone, and it broke out again. So you could have got back in here. This would have been another entry into the trade. And this is what they call manual trading. You don't see any indicators on here. But now I can go back and add indicators. That's another lesson. But we call it naked trading. Naked trading is no indicators. You're trading specifically off price action. Price action, market structure, technical analysis, and fundamental analysis. Fundamental analysis is the news. So I just used fundamental analysis here because I just told you. I said, oh, look at this. At 10 a.m., we had non-farm payroll at 8:30, and it tanked the market. So I wait till a market correction comes around, then boom, I come back and take the trade to the upside here, right? And of course, you got to put your stop loss in there, and you take profit because you don't be greedy. You know, the market gives you money. You got to get in and out of the market. So this would have been an intraday trade because I'm holding it for multiple hours. From 9, I got in the trade at 10, right? 10, 11, 12, 1, 2. And by that time, you see that it reversed, right? I could have held it to the trend line, but once you see it reversing, then you get out. At that point, I would have gotten out way long ago. You know, if I would have got my pips here. Nonetheless, pips. This was only 400 pips. But when you trade in NFP, you're going to get 300 to 500 pips. If you can get 300 to 500 pips on a move on US 30, you're doing pretty good. Sometimes you get more, but you know, you don't want to be greedy with it. But again, you know, you're looking at support and resistance. So we covered a lot of things today. We covered the news. Forexfactory.com is what you want to have. I check that news every single day. That's my ritual every single day. Babypips.com is definitely needed if you're going to be trading. You could not live without that, okay? You got to have an account with TradingView. Don't have to be all bells and whistles, but they do have different various packages. I just don't like the pop-ups. You know, I just like my chart clean. So we went over the calendar Forex, babypips.com. We've got the TradingView. We went over support and resistance. Showed you a little bit about different markets, bullish, bearish. You see, this is a bullish market, right? So again, that's why I'm taking a buy, because we're in a bullish market. Candle patterns. There's something called there's the Japanese Candlestick Bible, which I suggest everyone get. I actually have a copy of it. So again, when I start getting deeper into this, I'll probably put up my email out there, or at least put it out there for a site so you can get it, because you need to have that. That's very important. Trend lines are important. Trend line tells you the trend of the market. Then you deal with brokers. I'm using Pepperstone here. That's one of the brokers. US 30 again is a indices, and it's comprised of the top. I'm gonna say it's top stocks. I want to say different very things that move it. Top 30 stocks, I think. I want to say, but I gotta double check that. But let's see. We went over line charts, right? And we went over higher time frames. So it's funny because when I started trading, I didn't have no one to teach me that. I had my man Mike. Shout out to Mike. He was one of my mentors in Forex. Him and another guy, Jason. And then I got into IML. I got into Tradera. I got into Epic. You know, I've been all around the place, man. 5 years of trading. I finally understand how it is, because they say 90% of traders lose money. 90% of traders. And I was part of that 90% of traders. I'm not anymore. I'm actually on the other side now. And I'm actually looking at the markets, and I can look at these markets and tear them apart. I can tell you exactly what's going on. Now, I can't tell you what's going to happen over here, right? There's no way I can do that. I can't forecast it. Okay, well, Jay, what's going to happen in March? I don't know, but I could mark the charts up and tell you what we need to look for. And if price comes to a certain zone, then I'm gonna be ready to trade it. And what I mean by that is happened here, right? Let's go back over here. Price came up here and came down to where my eyes are, right? The eyes told me, look what's happening. What the eyes say? The eyes say, look, Jay, look at this, man. Look at this tight market right here. And boom, you had NFP, took the market down. It created a low down here. This is really like a double bottom. And that's another pattern, double bottom, double tops. Triple bottom, triple tops, other things I gotta talk about. I think it's tea and cup holder, head and shoulders, so many different patterns. But this kind of created a low here, a low here, low there. And then once it created that was the move to take the trade. Now, I would have probably most likely had other indicators to help me, what they call confluences. So it's like, think of it as reasons why you don't drive on a highway, or reasons why you do this. If you have these reasons, I got reason 1, 2, 3, 4, 5, 6. I have all these reasons that allow me to take the trade. Okay, I just showed you one reason here. It made a low here, and it made a low here. It rejected here. See that? Rejections right here. That's 1. 2, I had a doji candle on the hour time frame. A doji candle which rejected. A doji on the 30-minute time frame, rejection. Rejection means that it couldn't pass that line. It rejected. So that means buyers are coming in the market now. Buyers are coming in. And we know that the overall trend of US 30 is bullish. So I'm not trying to take any sells in the market unless I know how to counter trend trade. And that's a super, super duper skill you have to have. You'll get burned. You'll definitely get burned because there's only so much sellers you can do because the market is going the other way. Unless you are on a higher time frame. Or unless you catch something at the top and you're getting a major retracement. Like this low move right here. You see these candles right here? 1, 2, 3, 4. I'd have taken that trade. That's 7 a.m. in the morning, right? Would I have caught that? Maybe I would have, maybe I wouldn't have. But that's different analysis over here. We're over here. That's another day. It's Monday, right? Actually, the next time we meet, I might go over this trade right here, another setup. I'm always looking for setups in the market. So that's how I like to trade. And it took a lot of time with the charts. It's like when you are a rapper, DJ, you're a film producer, or whatever else, you gotta put time into your craft. You know what I'm saying? And I'm a producer, a hip hop producer, I DJ. For 2 years, I didn't do any of that. So I asked these cats, all these rap cats and all these people that want to learn, they don't have the stamina to do that. I did that because I didn't want to be focused. I need to focus on charts. It took 2 years, this pandemic, 2 years. I didn't touch a keyboard. I didn't touch a record. I didn't go stand. I didn't do that stuff. I said, I got to get this trading stuff down because this trading stuff is going to allow me to do that. It's going to allow me to do hip hop. It's going to allow me to get these MCs and do this stuff. This is the key. I said, if I can't get this, I can't do that. I could, whatever, but this is it. So 2 years in the making, I was hardcore every day, study. Get it, lose money, come back to the charts. It's like going against Kobe or going against Shaq, dunks on you all the time. I come back to the game, come back to the game. And then it finally just clicked. Like now I'm just fluid with this stuff now. It just comes off the top of the dome, like Rakim, just rhyming. You know what I'm saying? So that's just, you have to, and you got to be a nerd with this stuff. You got to be addicted to it. This is addiction. You know what I'm saying? So you have to have, and you got to be addicted to anything you love. It could be reading, it could be cooking, it could be, jogging, whatever you do, you have passion about it. I have passion about trading. So, and it's rewarded me to do, certain things I want to do that I could do before. But either that's not the point. The point of the matter is that we want to learn how to trade because you want to be independent. You don't want to rely on me. Because what happens if I stop trading? You know what? I'm done trading. I made my million. I'm out. Then what are you going to do? Well, I don't know what to do. Well, you want to be sufficient, right? You want to know how to fish. I teach you how to fish. Then I leave you and you fish by yourself. Oh, I got to go back to Jay because he got to fish for me. No, you got to learn to be self-sufficient. So this trading thing takes time, and it's not a race, it's a marathon. I learned it in 5 years. It may take my man over here 2 years to learn it. Some people get it in 30 minutes. That's cool. I'm not racing against those people. I know what I gotta do to feel comfortable to trade. I know it takes time. They told me it takes 2 to 3 years so you become a profitable trader, because you want to be profitable. You don't want to win on Monday and lose on Tuesday, lose on Wednesday, lose on Thursday, lose on Friday, lose the next Monday, lose the next Tuesday. Oh, now I won 2 in a row. No, you've lost 6, dude. You're not consistent. Like Kobe, consistent. You don't see Kobe scoring 24 points, 30 points, and then go 0 for 20. Never. He might have, I don't know what his lowest game was, but you don't never see that. It's consistency. Michael Jordan was consistent for 14 years, right? 14 years, he was either in the championship or in the playoffs until he went to baseball. But my point is consistency. That's what you want. If you make $1 a day, you're better than the other 90%. I have more respect for a guy that can make $10 a day than a guy can make $100 a day, $100 one day, lose 50, win 200, lose 1,000, win 50, lose another 1,000. That's not what I want to see. I want to see consistent. I want to see counts grow. Counts want to see grow. If I have $100, I want to flip that to 1,000 in 4 days or 5 days, depending on what you want to do. But that's how you grow accounts. You manage your money and you manage it to a point where you want to see it grow. Because people say, I'm gonna give you $100. It don't work that way. It works in stocks, but I'm not doing that. I'm trading. It's different. Trading is different than just putting. I have $200 right here. Here's my $200. I'm gonna put this in the stock. Okay, let it grow. Buy, sell, high, low. That's cool. We do that. But trading is a little bit more different because now I'm trading every day on this particular instrument and doing that way. But if you had a stock, I could tell you exactly what that stock's going to do. The reason why, because I have my trading view. I can look at a stock. Take an example, right? Let's say, say, what Apple going to do? Okay, well, guess what? I'm going to pull up Apple. Let's not do Apple. Let's do IBM. IBM, right? IBM machines. What's IBM machine doing right now? Okay. Do I buy or sell? Well, what do I know? Well, I'm going to go over here. And I'm going to tell you right now that the stock is selling right now. Currently right now, the IBM stock is selling right now. Right? And here's something else. There's a huge gap right here. See that big gap right there? Stock's gap. So this gap has to be covered, has to be filled. So you had this long candle pattern right here, this long stick. That is a reversal pattern right there. So you see that the last, how many days? 1, 2, 3, 4, 5, 6. The last 8 days, IBM has been selling off. So I believe that IBM is going to continue to sell off until this gap is filled. It has to be filled with candles, right? We're up to, what was it? It's up to 196, something like that. So it's definitely on a retracement here. But you see, it's bullish, right? You see, it's bullish. See, it's up. It's been up for a while, right? But you see, it came down over here, right? It's been kind of side to side a little bit, right? Side to side, until it broke out. See how it broke out here? Broke out. They got this gap right here. So if I was trading this here, I would be cognizant of 9:30 tomorrow, and I'll be looking for sales. So I'm looking at 15-minute time frame. I'm looking for sales in this market. You can see it consolidated right in here. Okay? So, but I can tell you right now, if someone was trying to trade or put money into stocks for IBM, I would be telling them to look for sales right now where it is. Because if you had all this money right here in it, you'd be losing the money right here. Or if you was in a trade and you got way up to here, I tell you to sell off right here. This is the selling part right here. This part here is where you sell off. That's stocks. But I wouldn't have been able to know that if I didn't know how to go to a chart and look at it. So that's kind of like what I like to do. So that will conclude this area. A lot of talking, a lot of information. We'll see you next time on the Pip Dilla channel. Pete Left Headless. A lot of information.